Hi, this is PR Sundar. Welcome to this special episode where I'm going to talk about tax terrorism in India. It's a bit very harsh word, tax terrorism, but that is how many people feel. There is a report that says, every year, lots and lots of people are leaving India. As per a report, in 2023, 6,500 millionaires have left India. Yeah, so you can see that article here. This is as per Mr. Mohandas Pai. Now, why people feel, the taxation is so high? When you talk to the people, they say, no, you look at US is 40% tax, in India is only 25% tax. I'm talking about the corporate tax, not the individual one. Now, the point here is that, a country may have a higher tax, but that may be the direct tax may be higher, but indirect tax may not be higher. So, when you look at things, you have to look at, as a whole perspective. How much you are paying direct tax, how much you are paying indirect tax, then after paying so much tax, what is it you are getting back? Right? In US or in many European countries, definitely the tax rates are much higher than India. But that may be the direct tax. But the indirect tax may not be very high. But in India, direct tax is also high, indirect tax is also high. Just to give one comparison, assume that a person doing a business, in a company account. Let us say his turnover is about 6 crore. And assume that he makes about 20% profit. So there is a net profit of about 1.2 crore, right? Now, if the same company, if it does in Singapore, okay, the taxation will be, net profit is 1.2 crore, he will be liable to pay tax for that 1.2 crore. The taxation will be about 17%. But what happens? What are the differences? You tend to think a person paying 17% tax in Singapore and 25% tax in India. So you tend to think that, there's only hardly 8% difference. But that is not the real picture. Now I will tell you the real picture. Number one, a person whose turnover is less than 1 million Singapore dollar, which is about 6.5 crore, is not liable for paying GST in Singapore. Not liable to collect the GST, not liable to pay the GST. What is the reason? Now, assuming that a person is operating with, let us say, for example, for about 10% profit margin, if his turnover is about 6.5 crore, his net profit will be something about 60-65 lakh rupees. That's about 5 lakh rupees per month, So 5 lakh rupees per month, it's not a very high income. Okay. So therefore, they don't want to charge GST for those small businesses. But if you take in India, if it's a product, it's about 40 lakhs. If it's a services, it is about 20 lakhs. Say, for example, a person offering services, and if his turnover is more than 20 crore, he is liable to pay GST. Even in income tax, or assume that, his profit margin is around 10%. And 20 lakh, the profit margin is about 2 lakh rupees. That's about hardly 15,000 rupees per month. Do you think 15% per month is a very high income so that he has to be charged the GST? No. So that is the major difference. Whenever I talk about this GST, people always say, sir, you don't pay GST. You have to collect the money from other people, and that money only you are paying to the government as the GST. Where are you paying from your pocket? Yes, it is true. But the thing is that, when I come to you for a service, I pay GST to you. When you come to a service for me, you pay GST to me. When I come to you for a product, you collect GST from me. When you come to me for a product, so at the end of the day, we are not only service provider, so we are also service receiver. And we are not only the product seller, we are also product buyer. So at the end of the day, it is you and me paying the thing. Now, let me put it another way. Suppose you are willing to offer a service, for the kind of service that you are offering, the maximum I can afford 1 lakh rupees. I can't afford more than 1 lakh rupees. So, if your turnover is less than 20 lakh rupees, then you can just take 1 lakh from me and you can provide the service. The moment yours is more than 20 lakh rupees, you will be demanding me 1 lakh plus 18,000 GST. But when it is 1 lakh 18,000, I will not like to take your service. So because of that, the demand for your service also goes down. For the people who argue that no, you are collecting from other people only, okay, then make GST to 1,000%, 2,000%. Anyway, you are not going to pay, right? You are going to collect from other people, right? That is illogical because that other people includes you. For your business, other people are other people. For other business, you are that other person. So at the end of the day, you and me paying the GST, right? That's one thing. Second thing, in Singapore, let us say you do a business from January to December. The government will never disturb you. You do whatever you want. Okay? And then the next calendar year, you submit all the documents. I've done this business and this is my turnover, this is my profit. And then they will charge tax based on your net profit. But in India, what happens? In June month itself, you have to pay advance tax. You have to estimate your income, and based on that, you have to pay advance tax in the month of June. Again, you have to pay advance tax in September. Again, you have to pay advance tax in December. Again, you have to pay advance tax in March, right? And then next year, you can pay after calculating all the things. Now, how a person can pay advance tax without even actually knowing what exactly he will be getting it? Say, for example, traders in stock market, first 10 months they can make profit. One black swan event, they can lose all the money. So you don't pay the advance tax, they will charge interest for that. And as far as I know, most of the stock market traders, they don't pay the advance tax, they pay the interest. They don't mind paying interest. Because, in a black swan event, if anything goes wrong, then getting the refund from income tax department is very, very difficult. So that's an advance tax issue. And the third one, in Singapore, although they say 17% tax, okay, they give a lot of exemptions, like first $1 lakh, there's a 50% tax, this and that. Then after that, they calculate the net tax. After calculating the net tax, okay, on that net tax, many times they give 20%, 30%, 40% rebate. That means they calculate, the total tax or total tax liability come to be, let us say, $10,000. They'll say this financial year or this calendar year, we give 20% rebate. That means you pay only, instead of 10,000, you pay only 8,000. But in India, you will never have any such thing. There is no question of any rebate or anything. And then on top of which, after doing everything, okay, the income tax department in Singapore calculate the tax. Let us say your total net tax payable is, let us say, $10,000. They'll say, okay, you have to pay this $10,000 corporate tax by the end of this month, or we give you another choice. Okay, you can pay this $10,000 as $1,000 every month over a period of 10 months without any interest, right? In India, what happens? You have to pay advance tax. You don't pay the advance tax, they will charge the interest. But here what they do, your business is over last year. This year you are filing the income tax. And then, net tax payable, they give you 10-month interest-free EMI. Finally, a person who is having a 6 crore turnover with a 1.2 crore profit, okay, and he will end up paying oddly, 6-7 lakh rupees as the tax in Singapore, whereas he will end up paying about 1.5 to 2 crore tax in India. Yes, for 6 crore turnover, GST alone will be, shaving off 1.2 crore. Then interest and advance tax. And then after that, taxation. Right? So, this taxation, is really very, very bad. And unfortunately, in Indian history, most of the time it was Tamil people who were finance ministers, right? But you know the Tamil people are very, very innovative people. And look at Chidambaram, right? When people demanded no capital gain tax, then he said, okay, no capital gain tax, but instead of that, I will add one tax called security transaction tax. The point here is that capital gain tax, people will pay only those who are gaining. But, even as per SEBI report, it says, 90% of the traders lose money in stock market, but all those 90% of the people pay tax. So, India is the only country where people pay tax for making losses also. Whereas, no country will be charging tax for your losses. They will charge tax only for your profit, not for the okay, fine. The government is losing the money because they abolished the capital gain tax. Right? Instead of that, they brought the security transaction tax. Okay, we can understand. But after 1 or 2 years, what P. Chidambaram did, security transaction tax, okay, cannot be offset against the final tax payment. How can you say that, right? Then now you say June month you pay advance tax, September month you pay advance tax. Then finally you say, no, finally you cannot offset this, you still have to pay 25% tax. That is illogical, right? So security transaction tax is a tax that we are paying, right? How can he say, it is not, that tax paid cannot be offset against the final tax payment? Then what happened? Okay, to add fuel to the fire, the BJP government came, and what they did, the long-term capital gain tax was brought in. Long-term capital gain tax went out. That is why security transaction tax came. But what happened, first stage, long-term capital gain tax went out and security transaction tax came in. Then after that, what the Congress government did, security transaction tax is a tax paid, okay, which cannot be offset against the final tax payment. Then after that, what BJP government did, they brought back the long-term capital gain tax, but security transaction tax was not removed. Security transaction tax was brought in lieu of long-term capital gain tax. But now that tax has also come. And not only that, during BJP government, security transaction tax for options traders has gone up nearly by 4 times. Right? 4 times, not 4%, is 4 times. And now there is a strong rumor, okay, if BJP comes to power, then there will be no long-term capital gain tax, there will be no short-term capital gain tax. Just wait, don't be happy. All your profit will be added into your income, you will end up paying 30% plus tax. And most of the people holding huge amount of shares, okay, are ultra rich people. Like say for example, Rakesh Jhunjhunwala, they are holding like thousands of crores. Okay. Now, even if they sell the shares, now they are paying only 10% long-term capital gain tax. But if that is being added into their income, okay, they will end up paying 42% tax. Because an individual making more than 5 crore per annum, they'll end up paying about 42% as the tax. So just imagine, long-term capital gain tax, you pay 42% tax. That's unimaginable, right? Now, the problem in India, it's a multifold problem, I can say, right? Now, in India, the wealth distribution is also very, very bad. So you look at this Economic Times report, wealth of India's richest 1% is more than 4 times the total for 70% of the poor people, which means like the total asset of the 70% of the population, the total asset of the top 1%. So the 70 people put together, whatever is they're having, 4 times more than that these people are holding. So there is no equitable distribution of wealth in India. So this is another big problem, right? And on one side people are struggling to get a job, okay, but other side, you see this income tax raid, ED raid, people are, 300 crore, 400 crore, at one point of time, even the Indian economy itself or India budget itself, not that much money. But now they go for the rate, 1%, they get 300 crore, 400 crore. right? So this is another problem. And then you look at this report, okay, coming to the GST, India's poorest half pay 2/3 of the GST, right? The bottom 50% of the people pay, 2/3 of the GST, and middle class people pay the remaining 30%, and the top richest people, they only pay 3% GST. Now, taxation in a country must be a progressive tax, which means the poor people pay less tax and rich people pay more tax. But you look here, there is so much of tax in petroleum products. But who uses the petroleum products? Even a poor man, even a person, I don't think that nowadays anybody, commute by bicycle. People have a two-wheeler, a small cars. They also have to pay same tax as the richest people. And how many of you know that, okay, the petrol that is being used in aeroplane, what they call it as white petrol or aviation turbine fuel. So that is cheaper in India, than the petrol that a common man using for two-wheeler, right? So, that's because, they want to encourage the aviation industry. So they price it less. But why they do not want to encourage the two-wheeler people, there is no answer. Number one, people who are not happy with this high taxation, they plan to relocate, they go to other countries. So that is why in the last 5-10 years, the number of people giving up the Indian passport or shifting from India to other countries is on the high. And however, not everybody can move, because like you have a business in India, then how can you move, right? So people who can do work from home, they can move to other countries. But people who have the physical presence required in India, so they can't move, right? So hopefully, at some point of time, government realizes this and go for a rationalization of taxation. I think this GST has to be looked into. In my opinion, at least, 2 crore turnover should be exempt from tax. So GST is usually for the big businesses, not for small businesses. So let us hope something happens to India financial positions, and let us hope that in future, whichever government comes in, so they reduce the tax burden for the citizens. And in the next video, I will come out with what people get in Singapore or any other country when they pay so much tax, and what Indians get when they pay so much tax. I hope you enjoyed watching this video. Thank you for watching.